Hello everyone, welcome to a breakdown on EU. We're gonna start off with the weekly time frame to see what was my higher time frame thought process and how did I determine my drawn liquidity. So last week my expectation was this CRT low or this weekly FVG is my drawn liquidity, right? But then you guys know that we had a discrepancy or an SMT divergence in price on Tuesday, and then for the rest of the week I changed my bias to bullish until the weekly candles close. And you can see that price did indeed close higher for the rest of the week and had bullish price action till Friday. Now this week my expectation were again bullish, right? But I skipped Monday because of NFP. NFP had formed a huge unusual range, right? And I waited to see how does Monday performs to see whether the SMT that we had formed last week stays intact or whether that SMT has now faded and now we can disregard that SMT this week and form and generate new trading ideas. And for that I waited for Monday price action to form without taking any trade idea so that I could use that Monday's price action as a framework to make or to generate trading ideas or to make informed trading decisions, right? And that's exactly what I did. And that's exactly what our job is, right? It's not about being right or wrong, it's about catching the right opportunities and profiting off of price action and everywhere you can and following your system at all times. If your system is signaled towards bullish price action, then you're going to look for longs or bullish trading ideas, not caring about how you feel about the markets or what you want the market to do, right? Similarly, if it's pointing and signaling you a bearish bias or a bearish drawn liquidity, then your objective is going to be to look for shorts, right? Simple as that. You're not gonna consider your sentiments or emotional biases at all, right? Everything is gonna have to be completely mechanical based on what your system is telling you, right? Which is again going to be based on the analysis that you would have done. That's why we make sure that we do a new analysis at the start of each week and at the start of each day before our trading session starts, right? That's what we call preparing for the week or preparing for the trading session, right? That's an important part of our trading. You're going to make sure that the past performance or past biases that you had do not influence your thoughts for the next week, right? You're going to make sure that you forget about the past week and let it be. You're going to forget what drawn liquidity you had, what bias that you had, how did you execute it, did you ended up the week with loss or win, doesn't matter, right? You're going to forget about all of that, right? And then you're going to start the new week with fresh new analysis and generate new trading ideas in new drawn liquidities, right? And new biases. Now, obviously, forgetting about the incomplete is just unrealistic, right? And you cannot possibly do that. But the point I'm trying to make is that you have to start each new week and day fresh, right? Regardless of what happened past week or regardless of how you performed previously, right? That's what you're gonna do. That's what you're gonna make sure to do each new week. Forget about what happened the past week, and then next week adjust to the new scenarios and to the new price action and form new trading ideas and biases, and then make sure to trade in the direction of those drawn liquidities and those biases. Now let's get back to the breakdown. So I skipped Monday because of NFP because it had formed a large range and usually Monday tends to have lower probability conditions after NFP, right? So due to that I skipped Monday. Now this is a separate important topic in itself, knowing which conditions or times to avoid trading and when to actually take part and participate, right? These are called filters. Having filters, knowing and being aware of them is important, right? Because they're going to let you know which sort of days or sessions to avoid trading and in which one to actually participate, take parts and take trades, right? So because of the filter that we had NFP on Friday, that's why I skipped Monday because of the large unusual range that NFP had formed. So that was a filter for me due to which I skipped Monday. And then on Tuesday, I had to first of all determine my drawn liquidity for the short term towards which I would have to take entries on the lower time frame. And for that, I took this weekly FAG or this weekly CRT low is my short term drawn liquidity for price, right? Now there are multiple reasons as to why I chose this as my drawn liquidity and why did I ignore the SMT divergence from last week, right? Now, first of all, to discuss why I chose this as my short-term non-liquidity, the thought process is simple, right? Some of you might already be aware of it. So, my long-term non-liquidity for price is the weekly range high, which we all know, right? But a few weeks ago, we took out this range with this weekly candle, right? And after that, I took this candle as a CRT and I started looking for price to retrace toward this weekly CRT low to take it out before it starts moving higher, right? The next reason is market profiles. We know that we had an expansion, right? And after this expansion, I expected a retracement profile to occur, and this is that retracement profile, right? But now I also have to measure and choose a key level where this retracement profile could potentially end and where this retracement profile could go to. And for that, we've got first of all this weekly CRT low and this weekly FEG low as our targets, right? This is the thought process. Now, to explain why I disregard the FEG from last week, let's go down to the daily time frame. So, on the daily time frame, you can see that last week on Tuesday, I expected bearish price action, right, till Tuesday, and then we had formed that SMT divergence on price on Tuesday, and then you can see for the rest of the week, price formed a bullish price action and closed higher, right? Now this week I skipped Monday to see what sort of price action are we gonna form, right? And you can see that what happened on Monday is that we had this bearish daily candle or this down close candle, right? Now this week, at the start of the week on Monday, I did not had a clear short-term down liquidity that I could have chosen, right? Because we had conflicting ideas. I did not know whether we're gonna see bullish price action to continue that trend from the last week and respect the FEG and respect SMT divergence even this week, or whether we're gonna move lower to take out the previous week's low and test the weekly CRT, test the weekly FEG, and then starts moving higher, right? Those were the two scenarios that we could have expected, right? And I had conflicting ideas on Monday, right? I wasn't sure about that. That's why I skipped Monday to show me some price action. So then that based on that Monday's price action or based on Monday's framework, I could figure it out or I could figure which one of those scenarios could potentially play out, right? So if in the same way, if you have conflicting ideas and you're not sure about what price is going to do, then the best thing is to just stay away from the charts, right? Until price forms favorable price action that you can actually measure or assess and can make clear verdicts or decisions based off of that, right? That's exactly what I did on Monday. I wasn't sure, so I skipped it. And then on Tuesday, everything was crystal clear to me, right? Because Monday had formed this bearish daily candle, which closed right above this low and closed right to the extreme. So on Tuesday, what I was seeing and what I concluded is that this move higher was a short-term retracement, right? It was a short-term retracement so that price could rebalance this daily dealing range and test a key level in this form. You can see price went above last week and tested this daily order block in this FVG in the premium region. And then after testing the premium key level, it expanded lower again. It is expanded lower again. Sorry. That's what I saw on Tuesday this week, right? Now remember, I did not expected this while it was happening, right? I didn't know that whether it was a retracement to rebalance this range or whether it was an expansion, right? But on Monday, after this price action it formed, I concluded this. I used the previous price action to form a framework, right? And now that I formed this accurate framework, I can now exploit this framework and make informed decisions based off of it in terms of my short-term draw liquidity and my intraday drawn liquidity, right? So based off of that framework, I took advantage from it and determined my short-term drawn liquidity, and I took the weekly CRT low or the weekly FEG as my drawn liquidity after all of this price action had formed. I built all of this narrative on the higher time frame which supported my bearish ideas, right? Now, one of the main reason why I did that and why I formed that framework and built that narrative is because you can see that Monday closed right above this low, right? It almost took it out, but it didn't. just closed right above this low, right? And disregarded the FEG, right? Which meant that the next stop for price to expand to on Tuesday is going to be the weekly CRT low, right? And that's basically what a done on liquidity is, right? Knowing what is the next stop for price, and I determined that based on the previous price action that I was seeing, right? So on Tuesday, my drawn liquidity was simple: the weekly CRT low or this daily order block, which is perfectly aligning with the weekly FEG, right? And my buzz was bearish. So I adjusted to the new price action in the new conditions and determined my drawn liquidity in buys based on them instead of forcing the ideas from last week, right? What mattered here is that I exploited this bullish move. I even exploited this bullish move and took long trades here and profited off of here last week. And now even this week I took a trade on Tuesday based on this new price action and profited off of that as well. Right? It's not a matter of being right or wrong, it's a matter of profiting off of price, right? Following your plan and adjusting to the new scenarios and being flexible in your approach, right? Right? That's what your job is as well. Now let's go down to the 4-hour time frame to see how did I position myself in a CRT there. On the 4-hour time frame, you can see this price action from the last week and this week price action right here after this opening time. You can see on Monday price formed all of this bearish price action which I had skipped, right? Because I had conflicting ideas and I wasn't sure. Now by saying I wasn't sure, I mean that my system and my analysis that I had done on Monday did not showed me or gave me a clear directional bias to where price would go to, right? Now, obviously, I knew where the long-term drawn liquidity was, which was the weekly range high, right? But that's not my job as an intraday trader. My job as an intraday trader is to know what the current daily candle is gonna do and where it could go to, right? For the long term, it can go to wherever it want, right? But my job is to exploit what the current daily candle is going to do, and I didn't had any clear directional bias for that, and because of that I skipped Monday, right? Because if I did traded that daily candle, it would have been gambling because I didn't have clear directional bias, and I would have been just second guessing myself in doing pattern trading, right? Which is something I avoid at all cost, right? Now, by saying I wasn't sure, it's not like I wasn't feeling well or I didn't feel like following my plan, but basically the analysis that I had done and performed, just as I said before, did not show me a clear directional bias for the current daily candle. That's why I skipped Monday. But then on Tuesday, I accurately determined my bias and my short-term non-liquidity, and I had a clear directional bias as to where the price would go to, which is the weekly CRT low or the last week's low, the last week's candle low, or this daily order block below us, right? So that is pretty clear. Now on the 4-hour, my job on Tuesday was to find a CRT there in the direction of the short-term down liquidity, which is lower, and then position myself in that CRT and trade lower towards the down liquidity. Now, if we zoom in right here to in this price action, you can see that we stopped right here before taking this low and formed this price action. You can see that the 5 p.m. and 9 p.m. for our candles basically formed a range and did not had any significant moves, which also suggests and means that the Asian session and CBDR had formed a ranging profile, right? And during those sessions, price did not test a key level as well. So now based off of these factors and variables, I expected anticipated price to first of all have a normal intraday protraction profile to take out and purge the liquidity that was engineered and generated inside these candles and purge it, and also with that I expected it to test a higher time frame key level, which it did in the form of this rejection bar. Now the reason why this is a rejection block is because this particular candle purged the candle before it or the previous candle, which means it purged liquidity. Now the week of this candle could be treated as a rejection block, right? So I took this level, this rejection block is my key level, and expected price to test it during the intraday normal protraction profile during the manipulation phase, And also along with that, I took this 9 p.m. candle as my CRT because it had generated liquidity on the lower time frame in the form of forming a ranging profile during the Asian session, right? Or basically the Asian session range. Now another factor is that this candle was purged at a key time during London Opal Kin zone during 3 a.m., which increased the odds of it working out even more. Another huge factor is that we are in the KOD or the kiss of death phase of the sequence, right? Which is the last distribution phase before price takes out liquidity or reaches the higher time frame drawn liquidity. So based on all of these factors, I took this 9 p.m. candle as my 4-hour CRT, right, and expected a normal intraday protection profile in which price would have a manipulation profile above the Asian session range high and test a high time frame key level in the form of this rejection block and purge the CRT, and then it would reverse from there. Right? That was my thought process on the 4 hour. Now let's go down to the 15-minute time frame to see what was my detailed thought process there. So on the 15-minute, we've got the opening and closing times right here. Right after the opening time or the open of the daily candle, it went into a ranging profile right here and formed all of this range or consolidation during the Asian session or CBDR. Now this ranging profile generated liquidity, right, and also it hadn't tested any key level. So based on this, I expected a normal protection profile for price because I wanted price to purge and manipulate above this range first of all to take out the liquidity and test a higher time frame key level. And I anticipated this based off of intraday profile and built this narrative, right? Second reason or the second factor I expected a manipulation profile here and build this narrative is because of the open high low close concept, right? We generated liquidity. Now this liquidity had to be purged, and it was purged right here in the London Opal Kin zone, and we also tested a key level and formed the high of the daily candle according to the open high low close concept. And now that it had formed this high of the candle, it has to now distribute expand lower to rebalance the inefficiency or simply neutralize liquidity, right? Now another main factor behind all of this is that this all of this stuff happened at a key time, right? The key level was tested at a key time at 3 a.m. The CRT was purged at a key time, which was again the 3 a.m. candle, and I had built all of this clear and sharp narrative, and everything was pointing towards lower, which was the weekly FEG low, right? So everything was perfect clear to me, right? But obviously, before I could take an entry there, I had to wait for a model 1 entry or an order block set up to form, which formed right here after price closed below this candle. And then after that, I put my entry there at the open of the order block, stop loss above the order block's high, and I targeted the drawn liquidity lower, right? This was the whole thought process behind this trade. First of all, determine drawn liquidity. Second of all, build narrative and choose a CRT correctly. And then, third of all, wait for an entry setter on the lower time frame and execute it and manage it accurately or in the right way. That was the trade breakdown.